I got a good one for you. Top Gun here with you. You gotta learn to earn.
BENKY on the blockchain.
Gotta learn to earn. Gotta learn to earn. Learn. Fun with numbers, folks. Fun with numbers, folks. Let's do some math. Swing trade and get you wrecked. Don't do it. Swing trade and get you wrecked. Don't do it. Gotta learn to earn. Gotta learn to earn. Let's check the crystal ball. Crystal ball. Let's check the crystal ball. Crystal ball. I am not a financial advisor, but here's how I'm gonna burn my money. Burn my money. Burn my money. I am not a financial advisor.
Well, hello folks. Hope you enjoyed that new little video. That goes out to bassgodd, that's with 2 D's. Thank you so much for putting that together. Love to hear all those little interesting things that people do for this show. Love when people make me thumbnails or music or other things, or oh my god, the Top Gun jacket. It is the middle of summer and that thing is pretty cozy, so I've been like oh yeah, special events, some good news, I'll put it on. And then the market's been, doing its thing, so it hasn't been on, but still loving that thing. I love that I sported it off, and I'm going to again on a special occasion. But in the meantime, this one is a learn to earn video. Yeah, you guys have talked a little bit about not understanding when I do my technical analysis, because I probably kind of speed through it. So how do I read market charts? How do they talk to me? What am I seeing? How does this all come together for me? Let's build a market chart. We're going to look at the souffle, Tesla, because it trades like crypto. It's overinflated with the Tina argument. There's a valuation line, and that is very low. I've done a video about valuations. I picked on Tesla in that video. It kind of illustrates the point. Tesla should be priced at like $100 a share, not $1,000 a share, and this whole like 600, 700 is still just fallacy. But where do you get this information, Top Gun? Why do you have this? So let's have a look, shall we? All right, we're gonna dive in on Tesla. So there's a few things that I like to set up. Let's take the noise out. So we're gonna get rid of everything, and we want to see the macro, not the micro. We want a good whole long look at the picture over the course of years. Oh, does that not look like a crypto chart? Because that looks like a crypto chart to me. Especially since, wow, all right, Tesla's like whole lifetime. Wow. Yeah. Oh my god, we can see the number play out as it's trading in the 50, 60s, and then this shoot up. Well, I do believe the valuation is much closer to this range down here. And before the overstimulus to the economy, where people could overspeculate, and the Fed went into super printing mode. So there's a lot of deflation yet to happen as inflation takes hold of the economy, and the Fed doesn't do enough raising interest rates to do anything. So fundamentals. I'm not going to go into explaining inflation a whole lot other than it is a monetary phenomenon always. The supply chain BS does not matter. It is not a supply chain issue. It is a demand issue. Demand must be crushed. You do this through raising interest rates and raising unemployment rates. People have to get unemployed. I didn't create this system, but yes, you can compare it to the Hunger Games. Unemployment has to go up fundamentally to about 8 to 10% to get on top of this inflation. And even if you take the 2.5% that's supposed to be neutral out of it, if the inflation's at 8.5%, you take the 2.5 out, you still got to get to 6% for the bank interest rate to curb against inflation. It's not anywhere near that. They got to pull out a bazooka, stop messing around with these base points, and go for full point hikes like 2.5, 3 at the next meeting. That's not going to happen. So we've got more problems and pain to happen in the market. So it is fair to say that the market is in a bear market trend, that this is not just a small correction. Even if there's a market rally, the long-standing trend now is bearish, downward. The trend is your friend until the end. So let's start making some market predictions. How do we do this? How do we read this chart? Let's go ahead and start making some lines. We can change some colors and add boldness and significance later, but first we're going to put our base trade lines. Now, we're going to zoom in a little and we're going to start really nice and low. Oops. Let's get rid of that. Okay. So we're well into the past and well into the future on this. So let's have a look. When we bring our dotted line right about here, we get near a market top in the previous market and the bottom tested after the huge rise. So this makes for me an ultimate pain mark, a correction down to pre-pandemic levels. We see it $73 a share. This, as it was long-standing resistance, then finally broken and tested as support, becomes a fundamentally strong line of support because it crosses many tops and many bottoms, and a bottom, sorry. So we have a long-standing, multi-year line of resistance and then a line of support. So I'm going to say that that's our maximum pain, that about there we've caught down and shook down to its valuation level. Like, that's probably more pain than the market should take, but there we go. We can look at valuations of Tesla to see if the valuation is higher than that $73 mark. That'll tell us if somehow maximum pain brings us to that number, and then we should bounce up to the valuation mark. That would be an ultimate bottom. Until then, what do traders look at? Well, they look at other points of confluence. Like right here, we have a top and a bottom through that time frame. So this creates another firm tested line of resistance and support at $189 a share. Okay, so what we're doing here is building a step ladder of trade lines between, we see a place where it tested as a top and as a bottom. Like here, we're zoomed in too much in time, but there was some trading along this share number, 276. So we'll mark this off. Okay, now again, we see at about 333, there was actually some resistance and support numbers approximately. Now I'm not zoomed in as much as I should be to get these exact. This is just a rough look. Now look, we have more correction mass stuff. We should zoom in at this because we want a better look at the actual time frame to get the most bottoms and tops, the most significant data. So right here we have a stutter, and then it gets tested a couple of times, but we have a lot more action happening up here. And, well, right here, let's mark this one off. Where this tops, we can see clearly there's a red wick, well, very small the way I'm zoomed in, but I can see clearly that there is a red wick there. So that, again, marks a point where it had resistance and had to test. So it creates significance that's easy to see. But then somewhere in this chaos, there's probably a top range and a bottom range. This, however, the way I'm seeing the red candles, this feels like when it topped here, yeah, it cut right through here. So let's mark that off. So these are what I'm calling significant lines of resistance support. Okay, we're following so far, and we can continue to build these up the ladder, where we see again there was resistance and support at that level, some amount. It was broken through, though. This is not what I'd call a firm line. Really, I should forget that. A firm line would have more points. So right here, We actually have much better bottoming point there at 545. Okay. So you can see how this is slowly building up to a step ladder so we can get to today's prices. Now we see a lot of action happening and a lot of testing in this range. It holds very steady up until recently. That was, what was that? 619. Okay, so that's probably the number we're coming back to retest right now. And let's go up a little further. I'm not going to mark prices too high because I don't think there is much of a rebound coming. But let's see here. This was significant in the past. Yeah. Not sure if that really. Yeah. Hold it. It's been a little relevant. This line of 698. 696. There we go. 695. Okay. Now, we see, again, some correction action in and about this range right here. So we will mark this off. Hitting many points, and I am kind of calling that a top tradability now at 796. Like, that'll be kind of nice to see, but doubtful. Now, how do I read the market charts going more currently? So let's go ahead and zoom in a little bit, top here, and how do I read this? So first off, we can mark a line across these. This is an ultimate long, that's going to take a long time to come back and break that resistance. Now, much like here and then a rally, we can mark from this most recent top to go into the more recent cycle. So here is the more recent line of resistance, which we will have to come back and test, like back here. Now, when this happened, then the next high there creates a point of resistance. Now we broke that and it became a line of support as it was still trending down before it came to a rebound off a long-standing trend of support. Okay, so we're not going to confuse you too much with the past here, but I should draw down. That's how the long-standing from the two top points, boom, boom, makes. But you can see where Tesla started going sideways, but it still didn't rally just because it broke this line. It just means now it treated as support, started going down slower as sellers started to dissipate and market buyers started to show up. Okay, so I hope you're reading the fundamentals on how I slice through to find your trends. Now, your trend is your friend until the end. I'm going to delete this one in the past. And how do we do the one as of current? Where do you start marking this downward slope? Because that's quite nasty. Now, an interesting thing from the double tops is, using that as a line of support, it didn't really hold out the way I was hoping. I was hoping from the previous top to be able to find some sort of support line in here, something a little more meaningful that wasn't as scary as the current down or the downtrend that was built to begin with. So, as I say, the trend is your friend until the end. So, when the market chart started to correct, boom, all these downward wicks there. We hit the most from that topping all the way down. But then the market came up, but now it's coming back down. Will it come back down to ever test this? Will it come that extreme that quickly that we need this line of support? I don't know. But for now, it doesn't seem to be a very important line of support. So, market red as a line of support, something that hopefully we don't drop under, but there we see there's been a change in the line from here to here. This is now the directional trend. This is something a little less scary, a little more healthy. Lines up in the past with about there. Okay, so this I will make bold as it's more current, more relevant. Okay, same with this downtrend here. Let's go ahead and make it green, and let's make it a little more bold. It's a little more relevant. This is the bull flag formation overall that it is forming long trend, and these are the lines of support and resistance. Since we fell under, this is now a line of resistance that most likely we're going to bounce off of and drop. So this is how I mark like long-standing lines of resistance and support as we're trading the more recent trends. When we come to the tip of this bull flag, it'll either take this long-standing trend or take downward and create this as the new standing trend. Which channel will we flow? We will find out at the tip of the bull flag. Now, because the fundamentals in the market suck, I say she chooses down. But we want to get into how am I talking about these more recent things. So what am I usually looking at and talk about? Because occasionally I talk about the volume trading. So across the bottom here, I have the day-to-day volume. The higher the bar, the more volume. Green ones were positive traded days, more buying happened than selling, and red ones, more selling than buying. So generally you can see when volume picks up or drops off, the fun thing is it always happens for either the good reasons or the bad reasons. The good reasons or the bad reasons? Yeah. Just because volume picked up or dropped off isn't inherently good or bad. This is the first complicated thing in reading a chart. So when price is falling and falling and falling, and there is no volume, that would be the bad reasons. Basically, the market is screwed. Nobody wants to participate in it. It's just selling right off. That's bad. Now, when price is falling and suddenly volume goes from nothing and starts to pick up, this is generally the good reasons that volume picks up, because now this is basically calling a bottom. Now, if you're looking at volume picking up when it's going up and up, that's usually the bad reasons. Usually the volatility is starting to explode because it's topping. So as you're reading volume pickup, either on a crash, like if it's been low volume during the crash and low volume during the up, then you're looking at the good or the bad reasons. But if the correction is happening on low volume and then volume starts to pick up, well, the price could be going up or going down. So if volatility is increasing during the movement, like you're looking at a big fall off. So a way to look at this is right here at the bottom. Our volume picked up a little bit, traded up, but then started dropping off. This indicated topping, actually, and then a spike in volume. That was basically the rattle of it. Boom. All right. And then volume drops off, and then it starts picking up as it's dropping off. And you see it really pick up as, boom, it starts consolidating. And where volume starts to drop off a little, and it's going to choose direction up or down. So volume is tricky to read. It is basically like when people see an opportunity one way or another to make money, the volume picks up. When there's a lot of uncertainty in the market, the volume will be low, but it doesn't stop the asset from going up and down. It's very hard to actually try and always read the good reasons or the bad reasons. I still get confused in this, so it's hard for me to explain this properly and whether it's a good sign or a bad sign that volume is picking up. So in this right now, with Tesla, where she's sitting, with the volume she tried to pick up, but another way I read this is the volume came up and peaked, and all Tesla was able to achieve was basically sideways action in this channel of 768, to 620. So this middle line of support that I've drawn in here, I don't think even really matters. The way it's traded around, kind of ignoring that line, like it mattered a little bit back here, but it's just like that happen chance where every line coalesces, and I like those. So I keep that on my chart, but it doesn't seem to really be holding up. Like when I say firm, what I should be doing is making those bold. Like these are the firm lines that really, really matter. So again, here, this is where close to 3 lines meeting. So I believe this line will actually matter a lot. We'll see. This is me just starting to build a chart out of nowhere, fresh for Tesla. So other things that I look at to try and understand whether the volume is a good thing or a bad thing are the other trailing indicators. These are not lead indicators. The trend is your friend to the end. So as long as the trend is continuing, they're great indicators. But they don't tell you whether the trend is about to freak out and change. They don't tell you if, suddenly Taiwan's going to get invaded. So the other things I look at up here at the indicators is the MACD. The moving average convergence divergence. Okay? So looking at the MACD right here, basically we have the moving average as the center point. And then you can see overbought and oversold conditions. So this is kind of like reading the RSI against the moving average. And when you've got green impressions on the Instagram, basically it's starting to become overbought a little bit. Like it's being bought more often than being sold. And so red being sold more often than being bought. You can see the blue line drops below the red line while it's in these red conditions. Dark red falling. Light red and dark green mean going up. Light green and dark red mean falling. So that's where, even though it's red, I can be seeing, well, it's been having better and better and better. It's working towards a green impression. But here, we'll read the MACD coming over this whole area since that rally. So here, above the moving average, right here, this is where Tesla comes back above the moving average, being traded, but it starts to weaken. But while it weakens, it holds the massive line of support. That is a good sign for traders. So then we get more green impressions on the MACD as we get some upward momentum. Then a little uncertainty, red, and then you see green as it's marking the uptrend. But this isn't always guaranteed, but we're above the moving average, so everything, even though it's little above, very small impressions, green impressions, it's enough to move the price up and up and up and up till we top. We're still green on the Instagram, but you see we're light green, and we see up at the top the price starts falling. And we're selling under. So what we're doing is, this is the 200-week moving average. I don't even know. Let's look at the settings. These are named properly on the settings. All right, fast length, slow length, chart. See, that's where I don't even know the proper names for these. I know how to read it better than I know how to explain it. So basically, it starts to become oversold conditions, but still above the moving average price. But here we dip below the moving average price. So when you're below the moving average, the trend is definitely bearish. When you're above, bullish. That's usually an indicator. But here we peak, like here, this rally begins below the moving average. And basically most of the action is made, like we show green impressions on the Instagram, and boom, pop up above the moving average, everything is great. But these light green ones, okay, we're starting to top and we're coming down, but it doesn't mean, like right here, we start to top, come down, and then choose to turn around. So you have to read this with the price movements. Just because you have a lot of action here doesn't mean you have the greatest price action here. Like this overbought condition trading up continues hardcore while the price moves sideways. Like, you'd think looking down here at just the MACD, oh, money to be made, but you're looking at the price that's just sideways, holding it up, and that's a bad sign. Because the next time there's down pressure, it's likely to drop right down through the floor. So that's how I start to read the MACD. So it takes some time and some learning, and there are videos where you can get a much better explanation on the MACD and do some reading. But basically, while I'm looking for consolidation things here, I'd want to see red impressions trying to fight to green, not green falling to red. Green falling to red tells me that's going down. Red changing to green tells me that is about to pick up. So this, at different times on the MACD, tells me different things. Hopefully that explains the MACD a little bit better. So I read volume and the MACD to understand whether this is a good consolidation or a bad consolidation. Whether this was a market rally. Yep, this was a market rally. And it only ended up being a consolidation. So the next crash will be very painful, is what this says to me so far. And so the MACD, I like to sometimes see a better range of the RSI. So the RSI is basically the oversold or overbought conditions, indicators. The RSI, and I like the stock one. Statistic. Yeah, there we go. It's the standard RSI. So if we are above the 80% region, we are overbought. If we are below this region, we are oversold. Now, just because you are oversold doesn't mean you can't stay oversold. Just because you're overbought doesn't mean you can't stay overbought. But knowing that you are in extreme oversold conditions for a prolonged period is usually a good argument for a rally. So this is where the RSI, you see the rally that I talk about in the RSI and in the MACD. Fought hard, lots of buyers showed up, but not enough to balance all the sellers. Like, all this happens and it's just running out of steam just to hold the price steady. So to me, that says there's not enough economic pressure right now, and then we're still looking at another massive dip coming. No rally right now apparent in Tesla. As I'm looking at this, that is kind of harsh. Now, because the action is getting so chaotic in the markets, I look at beyond just the daily, and I look at the hourly trends or the 4-hour trends. So these cycles sometimes can predict a little bit more if I'm looking for any big action today. But in Tesla itself, I'm just seeing a lot more pain to come. So the 4-hour is something I would use if on the day I wasn't sure about the direction. But this is telling me that the moment we see red impressions on the Instagram, we're going to see huge price drop. And it is threatening red impressions on the Instagram for the second time in a couple of weeks. But it's basically begging any buyers really, and the buyers are showing up, they're just not enough pressure. The volume is falling down off. So less buyers, less sellers. Like, people are sold out, but there's still more sell pressure to come. This company is overvalued, and inflation is eating people's pockets away. So if you're fairly confident that the trend is your friend to the end and the trend is downward, and you know what's going, and the question is it going to fall quickly or slowly? And basically, as I'm seeing that we are overbought conditions, and this was basically, our rally rattle. Like back here, our rally rattle, our green impressions and overbought conditions got us this big row. But here, just sideways action. The market is not happy and is looking to come down further. That is how I read the RSI, the MACD, the volume, and create these lines where I can go, well, since it's been trading in this channel and I know it wants to go down, well, it's going to come down to test this red line at least, so it's going to break under 600. But when it does, I believe that this red line will become insignificant, and back to this one, where I'll make it a 3, this will become our significant line. So when she starts cracking, I think the next test line will be at 492. And then I think we could even see it as low as Boom. Yeah, as low as 407. So those are the major lines that I'm seeing in this area that speak to me. Whoa, oops. Grab that and move that. I think that was 495. Yeah. So this is how I build my charts. Where it's previously had resistance and support creates these sideways steps. These completely straight lines where it tells me channels and areas where it's going to stop along the trend. Usually it'll trade between the up and down, so this allows for sideways action in Tesla, as far as I'm concerned, till about for another month before she necessarily has to crash. This could beg any buyers for a month before the resistance knocks her down. But she could drop sooner, and I do not think this support will hold out. I think it'll be the deeper one, because I think this is the more relevant trend. Bang. And that the trend that was marked out is the previous trend that was your friend until the end. And I believe it's the end of that trend. See, so now I've got the faded one in the back and the bright one in the present, because I believe she's choosing further down. Fundamentally, the market has called for this. I've gone into the past and shown you how it's traded overinflated. So basically, this is big shorting opportunities as Tesla has to come down to its valuation. And how do you want to perceive its valuation? Well, a simple way I'm doing it is, how long would it take Tesla to buy all their market shares at this price back off the market? And the scary thing was, with their revenue at about this price, or even a little higher, Tesla said when I did it, I think it was 14 years. You can go back and see the valuation video. It was something scary. Ideally, it should be a year or less if it's within proper value, as far as I think. Somebody correct me if I'm wrong on a valuation. Now, I did a very rough one. I didn't include expenditures. I didn't look at the statement of cash flows. I didn't do the boring accountant thing. I completely glanced over net and gross, actually taking those. It was a very loose valuation. A proper valuation will take in all of that stuff. Look at the assets on hand, what can be done, basically how much the company is really worth, and the market cap should reflect that value, essentially. And I just basically did a basic one on its revenue and how it can afford, not what the actual company's worth, but the revenue it produces is part of its asset value. So, yeah, Tesla is overinflated thanks to the liquidity tsunami, and it has a lot of pain to come. And I've already marked out Apple and other things. You can see that Apple right now is actually the lead indicator. Tesla's been following Apple, and Apple is slammed right up against its resistance line. So it's about to get tested. If it can break this, it might actually show room for a rally and risk on, but I think it's going to show more pain. I think Michael Burry is right when he shorted back here at about 139. So he's in profit at the moment through all this kind of sideways action. But even if it does trade up long term, it's coming down. Michael Burry has had some habits of being a little bit early to things, but he is right. So even if he's a few months early on this one, he's not a couple years early. Even if there is some sort of summer market rally and confidence in Apple can restore and some risk on can come, some faith in the economy, like the falling oil prices for a bit just restores enough stupidity. You can never bet against stupid. When oil prices drop, finally really drop under $100 a barrel, when this upward trend is properly broken, I'm just going to slide it down a little bit to compensate for this dip out. We've had a few breaks out, so we'll make this more point accurate. But when we fall out of this trend, like a drunken prom date out of her limo, that will, I think, to the stupid money, indicate, yay, inflation has peaked, buy the dip, because there's so much retail investment out there, and we will unfortunately see a rally. Because fundamentally, the market is still buggered, and it's not going back to all-time highs, and that stupid money will have to then get shaken out. So Yeah, basically the reason for this is so oil. If you want to go back into the past, like let's really go, let's really, really, really go for your folks. Dive into the past. Come on, can I not get smaller than that? All right, what if I change this to like days, weeks, weeks? Oh yeah, there we go. There we go. Here's some historical data. So, 2008. This is what we need. So, oil prices. Basically, if you want to go and look at other charts, the oil prices kept going up while the market charts were going down during this time, just like right now. But when oil peaked here, this whole plummet in oil, um, basically, wow, you can see the volume trading, and then the volume's just been nominal still, even this time around. That's weird. So, anyways, point is, when oil finally collapsed, then the recession started. Like that's December '08. Did you remember the unemployment rates in 2009? Like the recession of 2009, as oil prices started to recover, when the recession actually like was at maximum pain, this started to recover the economy. So yeah, for all this, when we finally start dropping off, the recession's finally going to start. That's how I read that. And this is basically a regain in the economy. And funny enough, like this is so funny that oil prices had dropped like this, but the Fed was just printing money, and the economic policy was fighting against the future oil, the EV mania, a whole bunch of things. So I'm still sussing it out, trying to understand exactly how to interpret all of it with all of it. But when oil peaks and starts dropping, saying that, oh, inflation's peaking, no, inflation hasn't peaked. The economy has started tanking. And the wave of unemployment, tsunami of layoffs is coming. And then the huge recession and market pain is coming. Think of oil as a lead indicator. So a lot of stupid will think this is peak inflation and trade up a market rally is my bet this time around, because of the retail investors, the dumb mom and pop crowd, the Tina argument investors that have been buying Tesla stock hand over fist, ignoring valuations. Yeah, I think that there's still a lot of stupid money in the market, and that I'm not even sure oil has peaked yet. So oil could still have some more rise left in her before we even talk about that rally or that scenario. So I've tried to mark from some past points through again for tracking oil, but like looking at this small time segment over what really is a huge historical amount. So I mean, the oil, like, yeah, look at that, $145 a barrel. We didn't even get there yet. Oil has been at a higher price, and it is just amazing. So this is my lead indicator for how the world economy is doing, and whether a recession is yet upon us, forwarding all that downtrend. So we're looking at oil in this. All right, NASDAQ in the same perspective. Actually, let's go back to oil. Let's see if we can do a comparison. All right. NASDAQ. All right. So we can see, yeah, look at this. Right here, the oil had come down and fallen this much before the real pain hit the market. And it had a drop. Oh my God. Oh my God. Look at that drop. That is what I'm talking about. That 2008 huge drop. That's still to come at the end of this yellow or this orange line. whenever oil starts finally coming down properly, falls out of its upward trend. That is basically, I think, where it fell out of its upward trend. And the market really finally caved. So when she spills out, will we see a rally? A stupid rally? Let's zoom in on 2008. And it's hard to tell on the NASDAQ. I'll have to do some more investigating. But this is how I can compare market charts to see what's happening. And yeah, different points in history that are very significant, such as 2008 and 2015. So yeah, this is the stuff I look at. This is how I try to read the charts, and I am still learning as I go. So I hope this video has done a little more explanation, a little more education on why I find RSI charts so important, or find market charts so important across the actual market, across US oil, all that good stuff. Alright, so this is crazy. Let's zoom back in here. There. So yeah, when she falls out of the actual upward trend, that may be the actual sign for real pain in the market, that we have not yet felt all the pain we have to. So there, my fundamental reasons, how I read the MACD, the RSI. Feel free to comment. Yeah, you can go and look up actual YouTube videos that are much better technical explanations of the MACD and the RSI. But now you see how I build a chart and how I read it a little bit, and where I look for consolidation and line up where the RSI and the MACD is, and then the environment around the asset, the fundamentals, and think about whether it's choosing up or down, whether it wants to stay in its trend or leave its trend. This is why I call it the tea leaves. And it's generally an argument a lot of times between the technical, what the trend says it's doing, and the fundamentals, what's happening in the world around it. And this is what I try to read variously through week when I make my videos. I hope you guys have found this a little more educational, a little more explanational. Maybe now you know how to build your own chart. Go to tradingview.com and try it out. Build a watch list. Build some assets, some things you like that you want to watch the price of. See if they actually do well or not. Compare them to each other. Have some fun, kids. Fun with numbers. Gotta learn to earn. Man, I do like that part of that video. Gotta learn to earn. Gotta learn to earn. Like, I might just sample that and use it. That's awesome. BASSgodd, Double D, you rock. Yeah. Yeah. So anyways, till next time, folks, stay frosty.